Hey, Top Gun Options traders, Matt Buckley, call sign Wiz, the primary and weekly options model portfolio manager here at TGO, and the meandering market continues. Folks, we've essentially seen a week of nothing. Mainly, we've finished fourth quarter earnings unscathed. About three-quarters of the companies either met or beat expectations, and a smaller percentage obviously missed. So earnings more or less in line with the typical Wall Street game of under-promising and over-delivering. Now the market's really looking for a catalyst, either to go up or down. Now, obviously, in the past 3 months, we've seen a rip-your-face-off rally, right? The only break we've taken from this rally has been or was the clown car known as the fiscal cliff. And as soon as the Republicans folded like a cheap suit, the market resumed its rally back up here. However, as you all probably know, we're at historic highs here. We're at 5-year highs. More or less, you can say history ended or begins here with the financial tsunami. I really don't look pre-financial tsunami, but look at this massive run. Just an absolutely incredible run here, and you all know or should know that this is built on nothing. It's built on air. It's built on hydrogen, essentially, right? It's the Fed. This is a Fed-induced market, and when it crashes, it's going to be bad. It's going to be a lot worse than a financial tsunami. But as you can see, over the past 5 years, whenever we've had a sharp pullback around this time of the year, the Fed always steps in with their put, right? They step in to save the day, and the rally continues. We're starting to get toppy here, guys. You can see that we're starting to peter out a little bit here, right above 1,500 here on the SPX and Dow 14,000. As you know, and I've talked about this throughout the week, these round 1,000-point intervals, 100-point intervals on the SPX and the 1,000-point intervals on the Dow tend to act as magnets, meaning the market tends to drift up to them. They get up to that floor. They open the elevator doors, look around, and go, okay, this 15th floor really isn't finished, and either head back down or wallow around this level right here. And I think that's what we're seeing right now in the market. Really not too much in the way of economic data coming out this week. We had some retail sales numbers yesterday that were essentially flat. Weekly unemployment claims had a little green there, but still, folks, mid 300,000s to upper 300,000s is not the way to power ourselves out of a recovery. That's just, it's not going to happen. Later today, we have a bond auction, and then tomorrow we're going to get an early glimpse into what the consumer's thinking this February with the University of Michigan consumer sentiment numbers. So that'll be an interesting report to see, along with the Empire State Manufacturing Index. Folks, last time this thing fell out of bed, literally, and hit its head on the coffee table, down 7.8, and they're calling for a significant increase in that. The Empire State Manufacturing Index, folks, along with the Philly Fed, the Richmond Fed, and Chicago PMI last month, kind of starting to be canaries in the coal mine, right? In the Empire State area, seeing manufacturing slow down cannot be a good thing, right? So we have a lot of canaries in the coal mine, and one of the canaries, I was in live trading session yesterday, a couple live trading sessions this week. One of the things that a big canary in the coal mine that's that if you haven't seen and you're missing, you're going to get hurt. The VIX, folks, the VIX has gone up on some days when the market has gone up. That is very, very interesting, folks. The VIX has gone up when the market goes up. Now, many of you are sitting there going, well, that doesn't make sense. About 90% of the time, you're right. The VIX is going to go up when the market goes down, right? People scrambling for protection. But recently, and we've seen this on several large up days, that the VIX will actually go up when the market's up. Folks, that's not a canary in the coal mine. That's Big Bird dropping dead. That tells me that traders are holding their noses at this rally, meaning they don't believe it. They're not going to fight the Fed, but they're going to scramble for protection on the VIX because volatility is incredibly cheap right here. And you guys know by now, and you better have this written down, when vol is cheap, you buy it. When it's expensive, you sell it. And folks, we're at historic low levels on the VIX. Whenever I say this is nuts, your ears should perk up because the VIX being down here below 13 is nuts. You can go back, let's go back to the beginning of financial time. As I said, the financial tsunami, we were hovering around here, VIX 16s, and then we saw like VIX 90, right? But look at what volatility does, folks. It tends to revert to the mean. It never stays elevated for too long, does it? It's like volatility being this elevated for this long is like running on a treadmill at a 10 incline at 10 miles per hour. You can do it for a little bit and then you're done. Same thing with volatility. When a scare comes, people flock to get protection, and then kind of when the scare passes, volatility falls out of bed. Well, guess what? We're getting ready to get a scare, folks. In the next 2 weeks, 3 weeks, we're going to see Pelosi, Reid, Boehner, McConnell, and the president at a stoplight in Washington doing a Chinese fire drill clown car. It's gonna be ridiculous. We're gonna look stupid. We're gonna have the sequester debate. We're gonna have the continuing resolution / budget debate, and it's gonna get ugly. Volatility is gonna spike, and the market's gonna pull back. This market needs an excuse to pull back right now, and we're about to see it. So if you're not putting some protection on right now, you're doing it wrong. Our weekly options model portfolio, folks, has been crushing it. Look at the last 2 weeks. You ready? February 4th through today, right now when I'm recording this. Look at our performance during that time. There you go, February 4th through the 14th today. About $5,600 in profits in 2 weeks. In those 2 weeks, folks, we've only risked no more than $20,000. I risk no more than $10,000 a week in this weekly options model portfolio. And we've returned 28% in 2 weeks. Let's just see how we're doing this week. Let's go from Monday, when we put these trades on, to today. $2,800 in gains in 4 days, guys. $2,800 in gains in 4 days on $10,000 of risk. Again, a 28% return. Folks, this model portfolio, and we still have about, what's that, 300, maybe $350 to collect on these 2 trades, an Apple Iron Condor and a Google Iron Condor. So you can even increase that by a couple more $100. We're going to potentially make, if everything goes well into expiration tomorrow, $3,000 this week in 5 days on $10,000 of risk. 30% gain in 5 days. Folks, if you're not trading weekly options and you want to learn how, this is where you need to do it. TopGunOptions.com. You can hover over services and go to weekly options, or you can go up right there to the address bar like us old folks and type in TopGunOptions.com/weekly-options. Take a test flight. Don't take my word for it. Every Monday morning at 10 a.m., we do a 30-minute weekly options live trading session where I put on 2 new trades, 2 weekly trades, sometimes 3. Just depends on what the market's showing me. And we manage those throughout the week. Don't worry, hey Wiz, I work at 10 a.m. Monday mornings. Just about all of us do, right? Doesn't matter. I record the sessions, and I also immediately send out an email and an SMS alert with the trades that I'm adding to the model portfolio. And anytime throughout the week, when I send out an update to one of the trades, you get it right in your cell phone or right in your email almost instantaneously, okay? So don't worry if you can't show up for the live sessions. It doesn't matter. You're still going to get the trades. You're still going to see what I'm doing in the weekly options model portfolio. And as you can see, folks, as I like to say, numbers lie, people don't. So there you go, $5,600 in 2 weeks on about $20,000 in risk. That's discipline. That's risk management. That's superior execution. So sign up today, folks. Take a test flight. And see how we're doing it here. Okay, got to run. Like I said, we're going to continue this meandering market until we get some direction, and I think the direction is going to be to the downside. And if you're not hedged, you're not protected, you're going to get wiped out. So stay in here, stay tuned to Top Gun Options and our daily sit rep reports so you can stay safe. Happy hunting. Make sure you hedge, and I'll be back with Wealth Creation Investing's Friday market wrap up tomorrow. We'll see you.